I met at least 15, 20 people who I knew from 6, 7 years ago from Ethereum who are now all building on Solana.
Polymarket is the only application which has outgrown the value of its underlying blockchain. There's no application that is larger than Ethereum or Solana. There's no that is larger than Arbitrum, Optimism, etc.
What's sad, Mars protocol was hacked and Cosmos is so dead that it wasn't even worth mentioning.
The hacker now can buy a small doner.
It will create a prediction market and say, if I get a kebab in the next 5 minutes and I put $50 on it, and if you're in front of that line, you can buy yes and it resolves to yes if you buy me one, and you're basically getting 5 kebabs for free. Hey.
Welcome back to, I don't know which edition of the Roundtable it is, but it has been a couple of weeks since we've been together in this constellation with all of us on. So Yuri, you recently returned from Argentina from DEF CON, and Onur, you just came back from Solana Breakpoint. So yeah, how did you like it? How was the conference like?
Yuri, you want to kick it off?
I mean, I presented in the previous episode already. Love Buenos Aires, amazing city, amazing country. The vibe specifically at the conference was also nice. It was like these good old 2020, 2021 vibes, or DeFi focused. So it was very refreshing. Less hype, less noise. It was not that noisy. And Buenos Aires is an amazing city. So I don't know how Abu Dhabi was, but I would return to Buenos Aires at any given time. And Argentina, beautiful country. Great food, 10 out of 10.
Yeah, nice. UAE, specifically Abu Dhabi. I mean, I honestly didn't leave Yas Island. I was just on the main island where everything happened. Hilton Lobby was the main side event, which was great because I managed to book myself in there early enough. It was one of the best conferences I've ever been to, from multiple different angles we can dive into, but a huge success.
How did you like Abu Dhabi? Because when I was in Abu Dhabi, actually, I was like, oh, actually, it's a little bit more real than Dubai. Like, it felt a little bit more organic. I actually preferred it compared to Dubai.
So I had a huge bias towards UAE and Dubai specifically in general. I have to say, it's getting to a point where you can't ignore the upside anymore, which has nothing to do with tax neutrality, by the way. But like the sheer amount of capable people you have there, the amount of business opportunity that is present, the weather, at least 9 out of 12 months or 8 out of 12 months, it's just amazing. The food, the quality of life, the convenience. I think if you have kids, which I do, it's probably not the best place, especially since there's not a lot of outside life and there's no forest or anything like that, which we like to do as a family. But if you're like in your 20s, young, no kids, it should probably on the list for one of the cities that is a recommendation to. I mean, for me, like Abu Dhabi, Dubai is almost the same. It's just like an hour-and-a-half drive. I liked Abu Dhabi. I can't say anything bad. Food was great. Weather was amazing. So it was pretty good.
How was the connection from Berlin, actually? Like, how do you fly from Berlin to Abu Dhabi? Because Berlin is an island. Like, from Frankfurt, we have 800 flights.
Direct. There's a three times a week Eurowings flight, which is direct, which half of the plane was Breakpoint, so the BD game continued in the plane. You know, like I have at least 3 Telegram selfies from the plane, which of people who I didn't meet at the conference, but they were also there.
What was your main takeaway from the conference, or how was the general vibe?
Okay, so it reminded me a lot of early DEF CONs or Ethereum conferences, minus the idealistic cyberpunk, we're all a DAO, we're going to change the way things work maximalism. I think Ethereum conferences early on, especially DEF CON, was a little bit like, I'm saying this completely neutral without judging, but Ethereum conferences early on were a bit more idealistic. I think people were decentralized maxing, privacy maxing, DAO maxing. And I would say the Solana conference was very similar in terms of like a lot of builders, a lot of young people, a lot of super hungry people who want to change the way things are. But the focus was not so much on DAOs, privacy, and decentralization. The focus was more on how do we get the $1 trillion, the 9 figures, the 10 figures, how do we get the $1 billion users? What are the next generation of apps going to look like? So it's more kind of like real world commercial driven, which again, I say completely without judging. Personally, I actually think it's kind of more, it's a good thing because it's more tangible with regards to how the world works today, at least.
No, I agree. Were there any specific themes or like projects that were standing out that were particularly present?
I mean, I was mainly around the Colosseum hackathon. The project I'm working on Solana right now got an honorable mention. Unruggable, which is a hardware wallet on Solana, became grand champion, and I know Adam and the team, so that was amazing. So other than kind of the building track and Colosseum track, I think it was a lot about institutions and how do we get the Goldmans, the Morgan Stanleys, the Goldman Sachs, how do we get the 10 figures, the 9 figures, 10 figures on chain? Because if you think about it, like Solana is great for small amounts for retail. Like if you're swapping 5K, 10, 15K, even 50K, it's perfect. The execution on DEXs is amazing. If you want to TWAP 20 million, I think it's problematic. I think you get better execution on Binance or on OTC desks. And in general, I think Solana wants to have the same experience for 8 figures, 9 figures, 10 figures deployment on chain that it has for 5-6 figure deployment on chain. And that was kind of a big theme. So, you had the usual like institution legislation, how is kind of the regulation landscape. You had some DeFi, you had some privacy, infrastructure, a bunch of different things. But I really focused on kind of the DeFi and the Colosseum building track. To be honest, I only went to 2 talks. The rest was just like meeting. I have like, my thoughts are a bit unstructured, but another thing I realized is I saw a lot of builders from other ecosystems, which are often referred to as refugees. But I was expecting a lot from like Cosmos Polkadot, which I've seen a lot. I wasn't expecting so many friends from early Ethereum days. I met at least 15, 20 people who I knew from 6-7 years ago from Ethereum who are now all building on Solana. And they all told me the same thing. They're like, yeah, like, Ethereum kind of became, Ethereum is still cool and everyone still likes Ethereum, but it's kind of more like the slow moving, more idealistic, we're still going to do the DAO thing ecosystem. Whereas if you want to have fun, Solana is the place to be. Like if you want to make finance fun and you want to build like fun apps, fun games, or like financialized games, hyper gamification of everything, I think it's clear that will happen on Solana.
Like which apps are standing out right now in terms of adoption? Like what new stuff is being built on Solana? Pump.fun, nobody cares about it anymore. I mean, the broader meme coin and like everything that is meme coin trading associated, nobody really cares. It's very dead sentiment wise. Volumes have also declined significantly. So what is there to do, or what is being built on Solana?
A lot. I mean, there is a whole vault ecosystem that is emerging, which is more on the DeFi yield generation side. I think Pump.fun being dead, I wouldn't really bet on that. I think it's just like the sentiment and the snapshot. But I totally see a scenario where in a few weeks, I wouldn't even say months, in a few weeks from now, we're going to have another meta where Pump.fun will be at the heart of it. I'm seeing a lot of apps being built on top of Pump.fun. So, you have like some sort of like aggregation of runners that are being launched right now, or you have some tooling around being able to analyze whether this is bundled or whether this looks like artificial versus organic. So I'm seeing like a lot of toolings around that. On the institutional side, the usual, seeing a lot of like DeFi yield stuff, RWA stuff. I mean, this isn't necessarily novel. It exists on all chains, but it just gets more and more mature. And it's like subtle details that differ. In terms of like new apps, mobile is actually a big focus. I'm seeing more and more gamified mobile app experiences, and we're also building something there.
Was there a lot of talk about the Solana Seeker phone, or like the way it can be integrated more into the ecosystem?
Yes, there was. I didn't follow that track, but I've seen a lot of Seeker-related conversations and talks.
I still think that crypto mobile is an underrated sector. Like, it should be
mobile
more.
So mobile apps, I think, are completely underutilized. I also spoke to some people from Pump, and Pump has 50 engineers or something, and they're all working on the mobile app. Like, maybe one or two are focusing on the Launchpad and the DEX, but generally, like, the main focus of Pump right now is the mobile app. If you look at the DeFi track of Coliseum, I think at least 2 of the winners had a core mobile app experience. It was like perps, but gamified on mobile for Solana. Seeker phone is another example. Although I'm personally more bearish on the hardware. I think the hardware...
Yeah, I was not talking about the hardware. I was talking about, I mean, may it be on the Seeker phone itself or like on any other phone. I think if you want to onboard new users, they will much more likely come through their phones, not through their laptops or desktops.
I fully agree. And I think the next logical step is to just fully abstract crypto from it. So if you have a gamified financial experience where I can just use like Apple Pay or Google Pay or any other credit card on-ramp, I don't really have to deal with wallets. I don't really have to like send to cryptic addresses. I can just have a fun experience. I think that is kind of the next generation of gamified fun financial experiences powered on Solana.
I saw from Cautionary, let me pull it up really quick. He had a tweet thread of like the most relevant talks and themes that he saw during Breakpoint. There seems to be like some involvement of UAE, whatever people. I mean, regulatory, they've always been very friendly. What were the attendees like? Like, was it a very dev-heavy crowd? Was it more DeFi institutional finance focused, like you would expect it on Token 2049, or like who were the people who you met there?
So this is one thing I was particularly surprised about. There's 2 reasons why I'm very bullish on Solana, and I'm definitely biased here, not hiding that. One is there were a lot of builders. Like I wasn't approached by BD people giving me their business cards and pitching some generic partnership. Everyone I spoke to was building an app, was building infrastructure, was building a wallet, was building a game that they kind of cryptified and have some on-chain component. So a lot of builders. And the second thing, and this makes me even more bullish, is most of the builders are super young. And I don't want to like go into boomer bashing, but it's different if you have such a young crowd of 20-year-olds building on chain versus you have like the second wave of follow-up builders who like, for example, Ethereum is in that state right now. Ethereum already got big. Like, most early ETH people already got rich. And I think the hunger is somewhat gone. Like, builders on Ethereum right now are more mature and a little bit older, but things are moving slower generally. And on Solana, you see the hunger. People didn't make it yet. Like, super young crowd that are building. I also met the VCs, and I want to add one more thing. On the VC side and on the bigger company side, it's definitely M&A right now, M&A season right now. So there's a lot of consolidation going on behind the scenes. It's not just the charts that consolidate, it's also the companies behind the scenes that consolidates. I think like there's a lot of companies without product market fit that either raised some amount of money, so they're too big to just fail and die. But that consolidation, I think, will play out fully. It already started. I mean, we're going to see a couple announcements of mergers and acquisitions, but I think next year this trend will continue.
Who's buying these companies, though?
I mean, big index funds, big exchanges, custody companies. Like the buyers are either exchanges or TradFi index fund companies that clearly see the trend that on-chain will 1000x, but they're TradFi people, right? They for example issue ETFs. They maybe have like a centralized exchange, or they are a clearinghouse. I don't know. Maybe they're a private equity fund. So they have a lot of money to deploy. They don't have an on-chain native team. So these big corporations or companies are looking to acquire smaller on-chain native teams to experiment and build and deploy capital on-chain.
Well, I think it makes sense in some cases for TradFi infra players who do not have crypto expertise, so they care less about the existing, or in most cases non-existing, product market fit of these crypto companies they're taking over. They care more about the competence and like the tech that they have built, because they can use it for another application and like another niche. What I think it does not make sense at all is for some PE fund to acquire crypto businesses. I mean, the business that most PE funds are in is they usually focus on rather boring and established companies with stable cash flows, and they try to make them more efficient. I mean, most of these crypto companies without product market fit don't even have cash flows.
It's all equihires, right? Like most of the acquisitions are not around the current state of the product. It's more about throw away what you have. You have a small 5-10 people crypto native team, and we are interested in deploying capital into crypto native stuff. So it's either like, I mean, if you have something, it's extending that. But I agree with you. I think like PE funds are not going to buy half-ass failed companies and give them an exit liquidity.
I think that makes sense.
Soulflare did a pretty cool drone-based demo. So they had like a drone show where the drones were forming a QR code, and you could scan that QR code to get an airdrop. And I think they distributed over $250,000 in funds, and
200 million?
$250,000.
Oh, okay. What do you think about the Coinbase announcement? To me, it seems like everything that is fintech adjacent and centralized exchange adjacent is more and more just integrating DeFi into their product offering. So it makes me somewhat bearish on the DeFi native industry, not in the sense that these applications will not be used. I mean, they will still be used, but fade more towards the backend, but probably the like attention and direct VC investments that these DeFi companies receive is going to be much harder to sustain going forward if it's essentially being either just integrated by centralized exchanges because it's open source, or if they start to build stuff themselves.
What's your exact thesis there?
My thesis is that the way we view doing something on chain is fading into the background more and more. Because if you're previously, like back in 2021, when you were a Binance user, for example, you could only buy the stuff that is directly listed on Binance. For all the like asymmetric upside stuff you could do back then, DeFi farming, like playing around on BNB chain, whatever, you had to withdraw, you had to set up your MetaMask, whatever. Now all of that stuff gets abstracted away or integrated. So I think that it's going to somewhat boost the user retention and user activity of centralized exchanges, but since there's no net new user influx, I think it's going to be a zero-sum game between what is now considered to interact on-chain native versus to interact on centralized exchanges. And centralized exchanges are the part that is going to benefit, and the on-chain economy, or at least like the perceived we're now doing something on-chain is going to decrease.
I mean, I wouldn't agree with the statement that there's no net new inflow into DeFi, or at least like there won't be. So I think this touches on a point I said before. So trade natively on Solana DeFi without knowing it. Like that's the key. We're gonna have more and more experiences that will be on chain, which is why I think on chain will 1000x from here. But you will not know that it's not like, oh, import your private key, sign a transaction, approve, send another transaction, then do the swap, then after 5 months do another approve because it expired, blah blah, like horrible UX. Obviously it's going to be much nicer. And from the institution side, which will bring the dollars, I think, it's just like it's strategic inaction. It's just waiting on purpose to see what doesn't get hacked, what gets more audits, where the confidence grows. And when I say like institutions will deploy into DeFi, they're not going to deploy into Pump Fund. They're going to deploy into Aave or more established things. And obviously, like every hack, like we've seen with Balancer recently, is a huge step back in that. But I think generally, like over the next 5 years, I think a lot of money will be deployed on chain by institutions. And on the retail side, I think we're going to see more and more like gamified or like simplified experiences, which will be not exclusively, but I think mobile will play a big role in that. And that's actually a huge opportunity. Like if you're a mobile engineer today and you just create a super nice interface for DeFi in crypto, abstracting away all the complexity and allowing people to from Apple Pay to vaults, from Apple Pay to LPing, from Apple Pay to staking or whatever. That's a huge business opportunity, and you can, like, solo engineer could almost build that. So I agree with you, but I think there will be net new inflow into on-chain in the next couple of years.
Well, yes, there are going to be more people using blockchain tech and like on-chain rails, but it will be mostly used to either transact in stable coins or the entire payment use case, or to invest, trade, fractionalize, stake, any types of real world assets that are getting tokenized on chain. What I struggle to see right now, or what I struggle to make an bull case right now, is that more of these on-chain native assets are getting more interesting for net new users again. Like I do not see any retail or fintech adjacent person being incrementally more interested right now in trading any on-chain assets, because the excitement around tokens with the lack of any securitization or like equity rights framework are getting less and less interesting, even though the technology is getting adopted more. Nobody is trying, I mean, with the maturation of the industry, we've started to value token more on cash flows. And after being around for 4 years, 5 years, it's not enough to make the case that like Uniswap or Aave or like take any other mostly governance token is going to reshape the future of finance if that token is not inherently connected to anything but governance rights, which in most cases are useless. So I don't think that the retail user is going to be incrementally more interested in these native crypto assets going forward. And I would even include Solana and Ethereum in that bucket. Not in the very long term. I very much see on a, let's say, 2 years and longer time horizon for crypto time scales, that we come to a market consensus that there is an inherent value in like owning part of that network. But I think going forward, especially if we see more fragile macro conditions in the next year, nobody's going to care about assets which you cannot justify via traditional metrics and which do not proportionally benefit from more network activity and more value flowing through that network.
That's a fair point. I agree with that. I just think that there will be a speculation component, which will be tied to a new meta, which will generate irrational market caps for certain tokens, which will attract a lot of users. And this, who knows how long that will be or when that will be. But otherwise, I agree with you. And the best example is Polymarket and Polygon. Like Polymarket and in general prediction markets is one of the most successful apps built in crypto. It's probably the most used app by normies that have nothing to do with crypto otherwise. Yet Polygon captures, I would say, zero value from it. So I agree with you. I think
that's a really good example. Probably Polymarket is actually the only application which has outgrown the value of its underlying blockchain. There's no application that is larger than Ethereum or Solana. There's no that is larger than Arbitrum, Optimism, etc. I mean, you could have made some abstract case that Hyperliquid before launching the Hyper EVM was somewhat like built on top of Arbitrum and it was larger than Arbitrum or whatever. But I mean, I think I get the point across that in that sense, Polymarket is a first mover.
I agree. By the way, did we lose Yuri, or did he just get annoyed we're bombarding the stream with Solana?
Yeah. No, all good, all good. Just need to open the door. I'm back.
Welcome back.
Welcome back. Thanks. Yeah, but I share this this perspective on that you mentioned, so I was still listening. Yeah, I also struggle to see right now a future where we onboard more people throughout the next couple of months. So I think, yeah, it will be a mix of consolidation. What you mentioned really resonates with me, and to add some insights from Buenos Aires, I would say this was like one of the top 3 topics. Consolidation, M&A activities going to just rise and rise and rise, even though most of these deals won't include cash. It's just shares basically being handed around, and a lot of people are getting laid off. That's another factor of it. Because
Fully
you don't
agree.
need that many people. You don't need that many people.
Fully agree. Like, this is actually very important. Most of these acquisitions, I don't know if most, but like I think a significant percentage of these acquisitions will be equity based, and the equity is not cheap. It will be valued at high valuations. I mean, think of hyped companies that have a $10 billion plus valuation right now, issuing equity with the cliff investing. So obviously there is definitely a component of the acquired companies having to pray such that after their shares vest, the company is still valued high enough. Otherwise, it will end up being not the best deal. But still, like, you know, if you don't have PMF, if the company is failing, I think that's still a decent outcome. And
you take what you get. That's the thing. Most people look around and they see, okay, there's no buyer really, and then you take what you get.
And Yuri, even if you think about it, like we were working on a infrastructure validator company that we also sold. I don't know if this year or last year. I don't have a good notion of time, but I would say like
in between.
Yeah, like from like, that was actually, I think, the beginning of the phase. I think the beginning was like towards the end of 2024, and I think it will continue throughout 2026. I think we'll look back and say, oh, there was actually like consolidation M&A season there. Yeah, we got distracted with like memes and prediction markets, but the real activity was M&A season, which we will see the full effect of it when, as a result from some of these M&As, kind of like new unicorns are being created.
Yeah. But also the thing is that why is equity so expensive right now? Simply because the valuations of these acquiring companies need to be held up. So what you basically do here is what we will see is that a lot of companies will just consolidate to basically a big pie, and then these people will try to get listed. That's the overall strategy. So you consolidate a bunch of companies, write a rough valuation on it, lay off a lot of people, make it more cash efficient, and then you try to go institutional, and then boom, you have a company that's listed.
The fact that most of these companies do not even generate any cash and are not acquired by any cash, and basically the only goal they're striving towards is to get publicly listed, so that somebody else is willing to pay cash for that stuff. It sounds very unsustainable, to put it that way. And I have my doubts that the majority of these newly spun up conglomerates will really sustain in the mid to long run.
That's on a completely different paper, and I also agree on that there is a certain uphill battle.
I mean, Max, think of it this way: like, If you're freaking Deutsche and you've been rugged by, what was it name called, like Cordova R3 IBM type of blockchain technology, like the first wave that banks tried, you realized, okay, private blockchains probably doesn't make sense, so let's do something on public blockchains. You're gonna easily spend 10 to 50 million, in my opinion, to acquire 2, 3, 4 on-chain native teams. At least if I were Deutsche, that's what I would do. To
I mean,
kind of like,
I was large and I was willing to spend like let's say 100 million in total. I could probably in some equity deals scoop up half of all Ethereum layer 2s who have like free users left. Like if I want to buy the base layer infrastructure, like an entire chain, I could do that for that money. What would I do with like validator companies or like more of these very tech heavy infra teams on the other hand? Like what's my use case for them as a bank? Are they able to transfer their skills over to like build tokenization frameworks for me? Yes, then they have a use case. But I think a significant part of all crypto teams, and I would also put some teams higher in the stack into that bucket, namely like all the teams who have been running the forks of like DEXs or these very basic applications on L2s and try to just differentiate themselves on a brand level. But basically these L2 chain ecosystems do not have any TVL nor activity nor users left. Like,
L2,
it
L2,
doesn't have any value.
L2s are not a good example. L2s are exactly, I'm with you. I completely agree with you. I think most LPs don't make sense and are dead. So LPs are, yes, they're public blockchains, but they're just like blockchains for the sake of being a blockchain and having a small feature, small benefit over deploying on mainnet. But I'm more talking about look at the main public blockchains, and I think really there's only Bitcoin, Ethereum, Solana, and Base in that order. Maybe Solana will get more relevant than Ethereum one day. And you take whatever, less than 1% of your annual revenue or profits and make a strategic decision to invest into exploration and research and doing something in that ecosystem. I don't think it's more specific than that. But yes, you're right. Like tokenization could be an angle, RWA could be an angle, DeFi could be an angle. Maybe like being on the forefront with regards to regulation and building more like regulated products could be an angle. Even securities, I think, could be an angle. I think personally, like I think every asset that exists and everything that can be priced will be on chain one way or another, whether it's directly on chain or there's a derivative on chain. And, you know, especially now with prediction markets, that's like a whole nother angle that could be explored. Yes, it's gambling, whatever, but like, I think like, especially like the whole sports betting market is huge. Not saying banks will pursue that. I mixed up a few things here, but in general, like, I think, so, okay, to simplify and to summarize, do you believe on-chain will 1000x in the next 10 years? Yes. Do you have a percent of your revenue that you can allocate to that? Yes. Like, what are you going to do with it? You're not going to obviously gamble on pump fund tokens. You're not going to just buy stable coins and deploy them for 3.6% yield. It's going to be something in between. I think you're going to look for on-chain native teams that are able to build interesting structured products. I mean, I didn't touch on like structured financial products on chain. I think there's a huge opportunity there as well. Which I think this is how the next generation of DeFi will look like in the next 3 to 5 years. But if I would be a bank, if I would be Deutsche, that's what I would do.
Do you have any specific companies you would acquire if you were Deutsche Bank?
Binary builders.
For 200 trillion.
No, that's too cheap. I think 666 trillion is fair market value.
That's 1 year revenue, not even a multiple.
Yeah, we have expensive contractors which we have to pay. So
yeah, this podcast is costly.
Exactly.
Anything on the DeFi side on Solana you found interesting? Was there a lot of talk about Solstice? I also know that Maple and Syrup, they've been expanding over to Solana quite a bit. I think they're very popular on, I think it's either Jupeland or Camino Land or both of them. And then like Exponent and RateX, which are similar to Pendle, so they enable trading yields and splitting yields on Solana. Was there any talk of these?
Like I said, I only watched 2 talks. I'm pretty sure there was a lot of interesting stuff, but I didn't follow them. I might actually just like go through this list and follow up on listening to the most interesting talks. They were very present. I spoke to Camino. I think their like whole vault ecosystem is interesting. I mean, just in general, like I think everything that's like there's a very simple concept actually, which I was surprised. Okay, let me take a step back. So I've been around for a long time, and I've seen the Ethereum ecosystem, the DeFi ecosystem, mature as kind of like a first-hand builder, right? And one thing I'm relatively surprised about is that a lot of the things that exist on Ethereum today, with regards to DeFi and composability, don't yet exist on Solana. I think Solana has at least like 1-2 years of a catch up to do when it comes to DeFi composability, the vault ecosystem, the DEX ecosystem, all the yield stuff. And yeah, like that was kind of like stating the obvious. Like I think Solana is kind of like fine by just catching up and having the same level of primitives, yield futures, DEXs, LP tools, structured products. I think Ethereum is still ahead, both with dollar amounts and base products. And this is kind of like independent from all the like gambling, innovation, pump fund stuff, right? Like that's happening on Solana on top of all the DeFi stuff that I think needs to do a little bit of catch up. So that's kind of was an interesting observation for me that there's still a lot of like very simple opportunities that in the next 1-2 years when it comes to Solana DeFi.
On the notion of the SVM catch-up trade, which I would mostly agree on, I think that there are some DeFi products available only on Ethereum and the Ethereum ecosystem, which Solana doesn't really need to also have, simply because, yes, they are over there and not over here, but they have basically 5 users, so it doesn't really matter, and they don't manage to attract significant TVL. So I would agree, particularly on the DeFi composability side of things, and to make money Legos more accessible on Solana and just make DeFi more integrated into the entire ecosystem. Because I think that like if you are active on chain on Ethereum, there's like 10 people left in the NFT bubble and everybody else is doing DeFi. On Solana, there's the DeFi bubble, there's the meme bubble, there's the NFT bubble, and it is still a little more separated and isolated than over on Ethereum. What I wanted to get to is that given we have seen a market decline over the past 2 months, there's right now no new net inflow of users. I would rather say that there's tons of people rage quitting every day on Twitter, many people leaving the industry who have worked in crypto for the past couple of years. So right now it is a zero sum, if not a negative sum game, to retain users and to retain capital between chains.
Yeah.
From what you've seen at DEF CON, Yuri, and what you've seen at Breakpoint Owner, would you say that Solana and Ethereum view themselves as direct competition right now? Because if you look at these two ecosystems, yes, Solana at the beginning of the year and last year had a very distinct advantage of being more useful for cheaper transactions, faster transactions. It was the cheap, fast chains, and you could be more experimental over there. Now the layer 1 scaling of Ethereum has caught up. Gas fees have been shrinking significantly. And the primary use case for Solana's fast and cheap transaction in the past were meme coins, which are now also dead. So one of the things is that Ethereum has been catching up to the advantage that Solana previously had. And I'm not saying that this advantage is completely gone, but the like orders of magnitude difference is not that extreme anymore. And the main use case for Solana which has been meme coins in the past, has also mostly disappeared. So how do you view the competition between the two chains right now?
I think the real competition will happen on the institutional side. And I think Solana is mainly trying to compete with Ethereum on the institutional side and get institutional dollars. Honestly, the retail competition is almost irrelevant. I think it's probably completely irrelevant in the grand scheme of things. I think 80%, maybe even 90% of the revenues generated, whether it's fees or on-chain, are probably done by, the top 5 to 10% of actors with regards to size and volume. That's kind of my intuition. When it comes to retail users, I also don't think there's a competition. Like Solana is the place to be. Fees are much cheaper. Chain is much faster. Any like on-chain gamified experience that you build will be objectively much, much nicer when it's built on Solana. And I would also say that the user base is probably still better on Solana for that type of stuff. And the last comment on that is, I don't think people left for good. I think it's just like, there's nothing to lock into right now. Like, it's dead. Like, what are you trying to do? Catch a 30K to 180K runner as retail? I think most of retail is just sidelined and waiting for risk on mode again.
I definitely resonate with the declining sentiment. There's been that article, I don't know if we discussed it on last week's roundtable, where it went pretty viral, where it was like, I wasted the last 8 years of my life working in crypto. And I think out of all the people who could have written this article, it kind of came from a weird place. Because I think it was one of the Evo, which was a Perpdex co-founders or like contributors. So like, he's been doing reasonably well. And most people who've been in crypto for 8 years, so whose this cycle is the third one, have been doing all right, because like they actually had the opportunity to get in very early and to ride extremely high multiples, even for the major assets, which the people who entered crypto in 2021 or later than that most likely did not have, or they also were not able to accumulate the same experience riding these cycles. But I think especially if you look at crypto Twitter, I mean, the CT bubble seems very dead, in the sense,
Okay.
not that there are no people left who are smart, or that all of the like interesting people have completely disappeared or have like completely gone astray, but a significant part of them have. Many people have moved on, and the stuff that is dominating the timeline is mostly AI generated and like InfoFi optimized slop.
Okay, so things are changing, and you may not like it, but this is what peak performance looks like. No, just kidding. But like, things are changing, and I think if you've been an OG in the space, like 2017 or even DeFi 2021, buy and hold was the meta. Like 2017, you could buy anything and just hold, and that was it, right? I mean, we're now living in the TikTok era where the attention span is 5 seconds, and it matches pretty well with the hold time on chain. So again, you may not like it, but this is what on chain, from a retail perspective, has become. It became like a short-sighted, quick attention span rotation game, and this kind of disheartens me as well. And this is why I'm building fields, because I want to go back to, hey, like, if you find something cool, I'm not saying to hold on for it for dear life, which I think many people don't even know what hodl means. I think, but at least, like, dude, at least hold something for a few months. Is that too much to ask? Like, I'm all these like orangey and cupsy and whatever these KOLs, which I openly despise and hate, whatever these are, Lexa Pro, you name them, like this culture that's being created by vamping everything in 5 seconds is not why I joined the space. Yet I'm still here building. I'm not leaving the space. I'm trying to adapt, and I'm trying to kind of like still be around when things change again. And I think things will change again. I mean, in general, like generationally, I think the short attention span, quick rotation theme will prevail. But when it comes to mechanism design, if you can design something that works and that will make money, I think that's when people will buy into more solid and legitimate things as well again. Yeah, that's my take.
Yeah, I think that's also like a good point for market outlooks for next year. Where are we heading into the next, like, what will 2026 look like? What do you think, Ona?
I think we should make a dedicated episode to like the themes, either next week or when we are about to head into the new year.
So we have some bets. We should resolve them, or like I don't know what time.
We can give an update on the bets.
Yeah. So that's one thing. I mean, my sentiment is very simple. In general, I think we're going to see consolidation. The one crime I'm expecting is towards the midterms, which I think are in November next year. So I'm expecting some crime towards midterms next year, but I'm also expecting consolidations before that. And it's very weird. Like generally, I would say we've peaked, but at the same time, like we're far from the consolidation being done because there's not enough blood on the streets. And even though, Max, you're describing many builders as leaving, like blood on the streets, proper blood on the streets looks different. It's much more depressive. And I think like even the conferences, like again, this was my first breakpoint, but that's not how a bear market conference feels like. I think we're not at the bottom. And at the same time, I wouldn't be surprised if we see some more crime. I mean, even if we look at BTC prices, like it's still relatively high, right? It's not at all-time high, but it's still relatively high.
Yeah, also
so just to give a brief update on the bet, I think we made it sometime during summer, was about BTCD, whether it is going to make new lows below 40%. So that is basically the lows that it established in the 2021 alt season. And over the last weeks, we've been consolidating in the upper 50s. So right now it's looking like I'm about to win the bet, but there's still 3.5 months left. So we set the expiry of the bet until the end of Q1 and Q1 2026. And last cycle in 2021, basically the entire down move of BTCD was completed in 50 days. So if that was to repeat, which I personally do not consider likely, but if it was to repeat, you still have a chance of winning that bet, owner.
What would be fun is, can you check if there's a prediction market? And if not, maybe we can create a market.
Yeah, I was thinking about that. We should do that more. Like we should aim to bet more, quite literally.
Yeah. Let's create a market, and you should create the market, and it should be will BTCD reach ATL by March 30th or something like that, and then you should put whatever amount we agreed on no, and then I'll buy the yes side, and then we see.
So there is one where will Bitcoin hit dominance, hit 70% before 2026.
We need to talk more about prediction
one
markets.
Where it's looking for several outcomes.
We need to talk more about prediction markets. The most hilarious tweet I've seen in the last weeks was something along the lines of, next time I'm hungry, I'm going to create a market where I'm going to say, will someone deliver food to this address in the next hour? And I'm going to put $15 on no. Someone will buy the yes side, buy a pizza, bring it to my doorstep. It will resolve to yes. Rest in peace, DoorDash, Uber Eats.
Yeah, I saw that too, where the message of a tweet was basically prediction markets will replace all commerce, which I mean, I am a very big proponent of financial absurdism. Some might call it financial nihilism and like this entire degenerate economy. But I mean, that's a different scale, which I personally would not subscribe to.
A more realistic scenario is bug bounties. I think like bug bounties, it makes perfect sense. If I want like 10K in bug bounties, or let's say even 100K in bug bounties, I'd say, hey, like, is there a critical bug in my code in this version that would lead to user funds being stolen, right? And I put like a 20K bug bounty on no. And if you find it, you buy the yes side, you submit the bug that you found, it resolves to yes, and you're booking the whatever money you know, depending on how much you bought and what the price was and so on. I think like,
what is the advantage of putting these bug bounties on a prediction market versus just having a bug bounty?
Yeah, I can. That's actually very good. That's a very good point. So think of like how structuring a bug bounty program would work today. I would need to internally create a budget for it. There would need to be a discussion. There would need to be a decision by decision makers. Then the budget would need to be allocated. You would need to put some resource on it that creates like the logistical venue, whether it's a forum or a formula and stuff like that. You need to do some communication around it. And it's kind of like a very off-chain effort. Now, if I'm an investor in a protocol, I want to protect my investment, I just create the market. I don't ask anyone. And if you're like a bug bounty hunter, you see the market and the market will decide basically, right? Like there's no employee required to create this program. It's just like the market does it because the market has an interest in this code base not being hacked, for example.
But the way you'd have to do it is to essentially use the receipt token of your deposit into any given protocol as the collateral for that prediction market. Otherwise, like, I mean, the default case is that the code is not getting hacked. So until there is a white hat hacker who's found like any hole in the code, the prediction market is probably trading at like 99 cents or even above 99 cents that there is no bug in the code. So for you to take that there is no bug in the code side is incredibly capital inefficient.
Because I create the market. I create the no market. Like,
yeah, but who's going to take the no side then?
No one. No one needs to take it. I create the market and initiate the market, and as an investor, I take the no side to hedge against the potential. Sorry, not to hedge. Just like to hedge against, like to protect my investment, basically.
No, then you have to take the yes side. But there is a bug.
Not protect financially as a hedge. There, I agree. More to incentivize someone to
an incentive to white hat hackers. Okay.
Exactly.
But then again, like if they're so, then what's the point of the prediction market on that? Because the white hat hacker, it would only create an additional incentive for him if he's able to take the yes side of that prediction market, and for him to take the yes side, there is a lot of liquidity required on the no side. Because otherwise, like, let's say the traditional way bug bounties are set right now, there's like a prize pool of $1 million or whatever amount. So he exploits the protocol, he negotiates around with them and gets, I don't know, 500,000 of the 1 million, and he returns the fund.
That's not how it works. That's not how it works.
How does it work?
So you don't exploit the protocol. That's not white hat. White hat is you identify the issue, and then through an official channel, you report it. And you can CC reputable auditors or firms to just like lock in the timestamp and everything when you report it. And if it holds up being true, it will legitimately resolve to yes, because there will be some communication around last week we fixed an issue which was reported by this person, which could have led to millions being lost. Now, there's a couple edge cases. Like if the company that you're reporting to says, this isn't a big issue, then you can say, okay, I'm just going to do like a small hack to prove you wrong. That's fine. But usually, like, you don't just hack the protocol. And also, like, you can do something like, let's say you have a tax. Let's say you have like revenue from fees, or like, you know how like most chains with inflation have dev funds? Why don't you put 1% of the fees constantly to the no side, whether you're going to get hacked? right? And maybe in the beginning it's 10K, maybe at some point it's 1 million. And then like, oh, like that's now very compelling and very liquid to buy the yes side and be a white hat hacker. So there's multiple ways you can do this. But even with 10K, you can at least buy a couple thousand on the yes side without slippage, which is a couple multiples when it resolves to yes. So if it's 99% on the no side and you're buying your first yes, that's like almost like 2 orders of magnitude. Obviously, it wouldn't hold that price if you even just buy a few thousand. I'm just saying, like, also, like, it doesn't matter if it's the best way. I just think it's an interesting thought experiment. There's much simpler examples like sports betting or like any other type of like gambling in general.
Yeah. I mean, you can definitely structure these things on a prediction market, but I don't know what the rate of improvement would be by, like, if you compare to like an insurance, or which is then again backed by a reinsurance, because there you can pool all of these different insurances to make it more capital efficient. If you have it on a prediction market, you basically need a huge amount of liquidity on the no side for these markets all the time for anybody to make it worthwhile for anybody to take the yes side. Because otherwise, like if you take the yes side but there's no liquidity, like what are you going to win? $100?
I actually think this is kind of one of the biggest challenges for prediction markets to succeed is going to be liquidity bootstrapping for the non-obvious markets. And the non-obvious markets is anything that is like not politics and not sports betting. That's obvious, right? Like, is Trump going to win the midterms? Sure. Like, everyone's going to gamble on that. But I think for smaller markets where liquidity isn't as omnipresent, bootstrapping that will actually be amazing. And for example, Kalshi gives a ton of grants if you build stuff like that around their ecosystem. So that's another thing I would pursue if I would be a builder interested in prediction markets. Just look at the Kalshi grants and try to build something there.
Nice. What's your end of year outlook, Yuri?
I mean, just a couple of weeks, right? So yeah, I think not much is going to happen as we are entering the Christmas season. I think it will be like more interesting to see what happens what's about to happen in January, February. And yeah, strongly, my idea of 2026 strongly aligns with Buenos. We are going to see a lot of consolidation. We will see, I think, very similar to what we have seen this year and the previous year, just a very boring decline of everything, which leads to more blood in the streets, which is for me a very bullish sign. Because again, I think there's still a lot of stuff we need to get rid of in the crypto markets. And I think the moment we really see blood on the street, like a gigantic bloodbath, then I'm also willing to become more bullish again. But so far, it looks like the same as usual. I mean, Ono mentioned it, the soft factors, right? If I'm at the crypto conferences and you look around, you really wouldn't believe that we are in a bear market or something. People still have money. There's still too much money around. I mean, surprise, we printed like, I don't know how many billions and trillions. I don't have the exact number in my head anymore in 2020. And now we are still suffering from this hangover a little bit. And hangover still needs to prolong itself.
I think that whatever happens price-wise over the next 2 weeks directionally is a rather high likelihood counter trade going into the new year. I think it bears an exaggerated sell-off going into year's end. It's pretty obvious that most people are tax loss harvesting, and that might have come with some interesting buying opportunities. And conversely, if we see retail-driven recovery rally into the 105 to 150,000 region, and like sentiment disproportionately increasing on alts, which is mostly retail-driven because most of the institutional shops are closed or at least not that active over the switch to the new year, I think that is going to be a pretty easy fade as well. So yeah, I think it might make sense to play the contrarian going into the new year.
Guys, you know what's sad? Mars Protocol was hacked and it wasn't even worth mentioning. Cosmos is so dead that it wasn't even worth mentioning.
How
Wow,
much
no.
TVL was still on there?
I don't even know.
13K?
$10. The hacker now can buy a small döner in Frankfurt. In Berlin, he gets a full one. I looked at the döner price index right now, and Berlin is still the cheapest city for döner kebab. So, one döner in Berlin.
What's your favorite döner kebab in Berlin?
Ooh, that's
Pamphylia.
a very...
Pamphylia and wedding. Trust me.
Okay, good question. So, I mean, I'm like very classic. Like, I really love Hasir. And what I actually also very like is it's a super random. It's called Döner Box. It's like right at our corner where I used to live, Max. The one that is right next to KitKat.
Kind of rancid looking one at the street corner.
Yeah. It's the most honest kebab shop you can think of. Just a super small stand right next to KitKat, open from I think like 10 a.m. to 4 a.m. or something. €7.50, and you just refuel your entire immune system with one go. Perfect.
I was going to say, if you don't want horse meat, you should go to a proper Yaprak Döner, which there's a couple in Berlin now. But I think Pamphylia is really outstanding. And by the way, it's not called Hasir, it's called Hasr.
Hasr.
Pronounce, please.
And obviously Zakros. But the
that's a
line
new
is always...
one. Yeah. That's actually +1. +1 on that. That's a newer one. I've been there once. It was very, very good. Yeah. Agree.
The only thing is, in no world I am standing in line for a kebab for an hour or something.
So I will create a prediction market and say, if I get a kebab in the next 5 minutes and I put $50 on it, and if you're in front of that line, you can buy yes, and it resolves to yes if you buy me one, and you're basically getting 5 kebabs for free. You can buy one and you can still get 4 more for free. See? Now you know why we need prediction markets.
So that Ono
Can't wait for the döner kebab assassination markets to spin up on Polymarket and Kalshi. What a time to be alive. Was great catching up, guys.
Yeah.
Any last words?
No, I'm hungry for kebabs.
Nice. I think it was a good one. We should definitely do, depending on whether we are around over the next few weeks, do a 2025 recap of which were the dominating themes when we went through the year and how they evolved, and if they're like completely forgotten or might revive in the next year. And then also do a 2026 outlook where we both come in with some hypotheses and discuss them, and ideally also like have some quantitative metrics to show for it.
All right. Thanks, everyone. It was a blast. See you next week.
See you next week. Bye-bye, guys.
Ciao.